Did you know that there are 4 common accounting mistakes that could cost you big money? In today's video, I'm going to show you the most common accounting mistakes and how to avoid them. This way, you can keep your business finances on track. All right, let's get started. How's it going? My name is Eric Neum. I run an accounting firm that helps high-growth entrepreneurs with their accounting and tax for the past 13 years. Today, we're going to be tackling a crucial topic: common accounting mistakes. And these errors can lead to financial losses, anxiety, and stress. But don't worry, I'm here to help you avoid them and keep your business thriving. Now, accounting is the backbone of every successful business, and even small mistakes can have huge consequences. From data entry errors to failing to reconcile accounts, I'm going to cover the top mistakes that I've seen and how to steer clear of them. Are you ready to become an accounting pro for your business? Let's dive in. Okay, let's first talk about data entry errors. Now, whether it's a typo, entering data in the wrong account, or miscategorizing an expense, these mistakes can cause serious issues and give you a lack of clarity. So you always want to double check your entries and use accounting software like QuickBooks to help you reduce these errors. Thankfully, QuickBooks, for example, removes a lot of the data entry issues because they just automate the bank transactions into the software automatically. That said, it is still easy to miscategorize expenses when tracking them, so it's always important to double check your work. Even large companies like Apple has rigorous data entry checks to avoid costly mistakes in their financial reports. The best way to double check your work is to have a routine procedure to look at your expenses by category and by month to make sure your expenses are properly categorized. The next mistake I see is not reconciling bank accounts regularly. This can also lead to errors. What does reconciling accounts means? This means matching your bank statements with your accounting records to make sure everything matches up. This is the one thing I see most small business owners that do their own books miss out on. Now, failing to do this can lead to discrepancies and also miss errors in the bookkeeping. Always make it a habit to reconcile your accounts on a monthly basis. At the end of the month, when you have your bank statement, take your bank statement and double check it with your bookkeeping. Using QuickBooks is not just for categorizing expenses. To properly close out your books for the month, you still need to check it against your bank statements. Another mistake that I see is ignoring the ability to track items on your balance sheet. All business owners should be tracking their basis, their company debts, and assets like cash position of the company on the balance sheet. Also, if you have investors, you should be tracking their equity stake of your company on the balance sheet as well for clarity. What a balance sheet does is it helps you communicate how much a company could be worth, how much it has on hand, or even what they call the book value. It's also used as a snapshot of a company's financial health. Also, if you're an S corporation owner, understanding your basis is incredibly crucial because it helps you determine how much you could take out in distributions, and if you take out an excess of basis, what could be subject to additional tax. Finally, the last thing that I see as a huge mistake is entrepreneurs tend to not look at their financials regularly. You're going to want to look at your financials regularly so that way it doesn't lead to disaster. Oftentimes, many entrepreneurs keep their head in the sand on their financials until the end of the year, when it's time to file their taxes. Unfortunately, this does not give business owners like you or me any kind of intel or clarity on how to properly run your company. Financials like profit and loss, cash available on hand, cash flow, and your balance sheet should be reviewed every single month. This will give you the ability to make adjustments in your business on the fly before it's too late. Now that you know the 4 most common mistakes to avoid in accounting, it's time to put this knowledge into action and implement it. You want to stay vigilant, use reliable software, and keep your records accurate. Now, if you found this video helpful, hit the like button, subscribe to the channel, and share it with your other friends and business owners. So thanks for watching. Keep your accounting clean, stay on top of your finances, and I'll see you in the next video. See you later. Take care.